from the key actions which happened during the Bharat Mobility Expo 2025. But then now let's keep pace with the earnings. Banking major Kotak Bank has come out with its Q3 earnings where both PAT and NII are in line with the street estimates. On the other hand, RBL Bank has also posted its Q3 earnings. My colleague Gaurav is joining us with all the detail, all the number crunching that he's done for us. Gaurav, 5 upgrades what we see on Kotak Mahindra Bank. Nearly brokerages are giving it a thumbs up after nearly 4.5 years. Tell us the highlights of both the banks, Kotak as well as RBL.
Well, absolutely. When we talk about numbers, those were actually in line. Let's talk about net interest income and PPOP and PAT. All the numbers were in line. But what was surprising here is that the net interest margins increased almost by 2 basis points on a sequential basis, whereas Street is expecting a decline because of the pressure which has been faced by the industry overall. And at the same time, second very positive trigger was that when we talk about credit costs, that came up at 0.68% and slippages actually declined on a sequential basis almost by 12%. Now, this was something which was not anticipated by the Street, because overall when we talk about banking segment, we are seeing the stress rising, and that is the reason why we are seeing some kind of positive uptick coming up for Kotak Mahindra Bank. On the other hand, when we talk about management commentary also, that remained very positive. Management did not sound anywhere cautious, and they are also at the same time being cautious on the unsecured segment, and that is the reason why we are seeing some upgrades coming up from brokerages as well. On the other hand, when we talk about RBL, when we talk about numbers, net interest income and PPOP was fairly in line, but when we talk about profitability, we saw a decline of around 86% on a year-on-year basis, and the reason being that provisions went up very sharply. In fact, the provisions were the highest in the quarter so far, and the reason being that MFI pressure for RBL Bank has been higher than expected. When we talk about credit cost, now management has said that although the credit cost will come down, but for FY25 it will remain high. In fact, for Q4 it will remain higher, and at the same time net interest margins will also see some kind of pressure. On the other hand, when we talk about slippages, we saw gross slippages went up as high as 6% because of the pressure in MFI segment. So definitely a very pressure environment is what we are seeing in RBL Bank, and that is the reason when we talk about brokerages also, we saw a very pessimistic note coming. So in fact, when we talk about brokerages like in IIFL, they have cut down their EPS estimate almost by 25 to 30% for the bank for FY27, and they have also cut the target price. So definitely on one hand, Kotak Mahindra Bank came up with exceptionally good numbers, and at the other hand, RBL Bank came up with weak set of numbers because of the high MFI exposure. On the back of this, we will be definitely watching out on both these banks today.
Well, absolutely. Thanks, Gaurav, for that update coming in on RBL Bank as well as Kotak Bank then. But let's also go across to Ansh, who's standing by with a report on Wipro as well as Tech Mahindra. Wipro, of course, reported a good set of numbers. Inline set coming in for Tech Mahindra. Ansh, get us a lowdown on both of these earnings then.
Well, Wipro has reported IT service revenue of 22,285 crore for Q3, showing a modest growth of 0.4% on a quarter-on-quarter basis, which is in line with the market expectation. Now, if we talk about net profit, then that has rose by 4.3%, surpassing the estimates of the market. While EBIT margin has improved from 16.8% to 17.4%, but in dollar terms, if we see the revenue, then that was reported at $2,630 million, reflecting a decline of more than 1%. Also, the company has reported large TCV wins worth rupees $960 million, although this marks a 35% decline compared to previous quarter. Now, if about attrition, then that has also increased from 14.5% to 15.3%. So the bottom line here is, despite the dip in dollar revenue, Wipro has delivered a better than expected performance in terms of profitability and operational efficiency, but a big dip in TCV still remains a concern. Tech Mahindra reported revenue which was marginally down by around 0.2% on quarter-on-quarter basis, staying in line with the market expectation. However, if we talk about profit, then that has dropped sharply by 21.4% to 989 crore, significantly missing the market estimates. If we talk about EBIT, then that has gone up by around 5.5%, with margin at 10.2%, which were in line with the market forecast. And now, if we talk about new deals, then of TCV, we are seeing $745 million, which is up from its initial number of $603 million. So this is a good factor here. But if we talk about attrition, then that has also actually increased from 10.6% to 11.2%. Now, while the Tech Mahindra delivered inline operational performance, the sharp decline in profit still remains a big concern here.
Okay, let's see how, what is...
If you like this video, then like, share and subscribe to ET Now.